Hello, guys. I hope that you are doing well and are studying. Okay, so this session will be covering employees tax as well as provisional tax. It's one of our longest session that we're going to be holding. I hope that you guys are energetic and you have your water bottle next to you so that you can actually quench the thirst as we go along covering our employees tax as well as our provisional tax. Now, the employees tax is a very important concept that we have to go through within this semester. Now, employees tax is a withholding tax which is actually deducted by the employer on a monthly basis. Okay, so you will see that within our employees tax calculation or in the process of determining employees tax, there are those amount that belong in the remuneration definition that are annual amount, and there are those figures that are monthly amount. For example, a salary is paid on a monthly basis, okay, or a wage is paid on a monthly or weekly basis. Whereas in terms of like when you're dealing with the concept of a bonus is a once-off pay. Okay, it's a once-off pay, so it's considered as an annual payment, just like a leave pay also is an annual payment. So within our employees tax calculation, you'll find that the way in which we'll determine or we'll calculate our employees tax, we'll have part A, the one that will calculate the employees tax based on our balance of remuneration. After we have taken our balance of remuneration, which is a monthly sort of a figure, and then we'll times it by 12 to get our annual equivalent. After that, we'll try and work out the tax on our annual payment, for example, a bonus or a leave pay should a situation be. Okay, so what I'm saying is it's very important for you to understand first what employees tax is all about. Okay, so employees tax, as I've said, it's a withholding tax. Okay, this withholding tax is deducted by employers on a monthly basis. That's part one that we have to understand in detail what employees tax is. You also need to know as to where then within the legislation do we find the information pertaining employees tax. Employees tax is dealt with under the fourth schedule of our legislation. Now you have to note the fact that employees tax is not an additional tax. What it merely is, it's an advance payment of our normal tax liability on the remuneration that is earned. Okay, and the other day I did explain that there are three specific important key components that are defined within paragraph 1 of our fourth schedule part 1. These components are the employer, the remuneration, as well as the employee definition. They are explained quite nicely within the fourth schedule part 1. Now the employer will be a person who pays a remuneration for the services that have been rendered. The employee is a person who renders the services in exchange of being remunerated. Now, one of the most important aspects that forms the definition of remuneration is the concept of the balance of remuneration. Now, the balance of remuneration is explained quite nicely in paragraph 2, subsection 4 of our legislation. Now, you'll notice that in terms of the format or the structure in which we use to calculate employees tax, we take our remuneration on a monthly basis, which are monthly figures, and then we'll less our section 11F contribution, and then what we will get is the balance of remuneration on a monthly base. Okay, and then after that we'll times by 12 to get an annual equivalent. So that's the first part of our calculation of employees tax. Then the second part will be to determine the tax on our annual payment, for example being a bonus or a leave pay, as I have explained. Okay, now the concept or the definition of an employer, it's explained in paragraph 1. We can go through that. It's one of a very important concept that you need to take into consideration, as well as the definition of an employee. Okay, sometimes you find that you have what is called a representative employer. A representative employer for a company could be the public officer, and then for for a non-resident employers, it could be an agent of such an employer having authority to actually remunerate or pay remunerations to the employees. Okay, hope that you guys are still with me. Now you'll notice that within the definition of remuneration within the fourth schedule, paragraph 1 that deals with the definitions, it's that it talks about any amount of income, which means that it's part of our gross income, but it must not be exempt with respect to section 10. Now there's those concepts that we dealt with in semester 1 that qualify for an exemption. For example, a uniform allowance will be given to an employee from an employer to actually buy a uniform to actually use in a line of service that you are providing with an employer. Okay, the other example that we dealt with is the transfer or relocation cost, the bursaries in line with section 10 subsection 1q. All of those then are not taken into consideration when we are determining employee tax. Now you'll notice that if you like to go through uniforms, those are found in section 10 subsection 1 little n cap a of our legislation, part of our exemption within section 10. Okay, now this is something that you supposedly to know that we covered from first semester. Now, the concept that I want you to still remember is the concept that we dealt with, the timing of our accruals. We said that in order to include a figure in semester 1 in our gross income, we include it on the basis of the area of receipt or the accrual. Now, the same principle will hold for employees' tax, which must be withheld when the remuneration is paid or become payable. Now, you'll notice that I said when the remuneration is paid or becomes payable, which means that employees' tax will have to be withheld, whichever comes first. However, there is an exception to the rule. Okay, there's an exception to the rule. The exception is with respect to a variable remuneration. Now, a variable remuneration we dealt with a lot in semester 1 when we were covering the concept of our receipts and our accruals, and we said that the variable remuneration is in line with our section 7 cap B. We even talked about the interest one in terms of our 7 cap E. Now, in terms of the fourth schedule, it is explained within paragraph 2 subsection 1 cap B of the fourth schedule that it states nicely that the employee's tax must be withheld on the dates that the amount is paid. Now, you remember that the variable remuneration or consideration, we include them within our gross income when they are paid, not when they accrue. So this is something that you need to take into consideration. Even though we are using the principle of our timing stating that we have to include this remuneration in terms of when they are paid or when they are payable. However, there is an exception to the rule, as I've said, that in terms of our variable remuneration, those ones, they will only be included when they are paid to an employee in line with our section 7 cap B. Now, the remuneration, as I've explained, it includes the amount, like our allowances and our fringe benefits that we went through in line with our 7 schedule. And then we looked in terms of our para I. We said that our fringe benefits will cover concepts of our subsistence allowances, our travel allowances, of our right of use motor vehicle. And we dealt with that in detail. In terms of our travel allowance, if you look at it more closely, what we did is the other day we covered the travel allowance in detail. We said that there's 2 specific methods that we'll have to take into account in line with our section 8 restriction 1. We have our deemed cost method, and we also have the actual cost method. We will use the cost scale table using the cost of the vehicle, but we said that we don't need to take into consideration the fact that the cost of the vehicle is VAT inclusive or VAT exclusive. We'll just use that figure, which is the cost of the vehicle, to determine what is the fixed cost of that vehicle. After getting the fixed cost, you'll have to then determine the fixed cost per kilometer, and then in terms of the fuel cost per kilometer, that is as per table, depending on which line does the cost of the vehicle falls into in terms of the table. Okay, obviously you'll be using the cost of the vehicle, but I'm not there. Okay, I'm just telling you that that fringe benefit will be part of our taxable income when we are determining the remuneration. Okay, the remuneration figure does then take into account these allowances, also they are incorporated or they are included. Okay, remember that in terms of our allowances, the net of the amount is included, which means that there is a potential reduction depending on the number of business kilometers or the business expenditure that will have been incurred. Now, one of the things that you'll have to take into consideration is the fact that you will claim a potential reduction that is greater. So if you see that, if like the employee was keeping a detailed logbook for the actual business expenditures that were incurred, so you'll have to do some sort of a comparison, which one is giving you a greater potential deduction between the deemed cost method and the actual expenditure method, and then you will decide from there. Okay, now the remuneration definition within the fourth schedule, it does give you the details or the specifications as to which figures are then excluded within the definition. These figures include, among others, that are excluded within the remuneration definition is the disability pension, our divorce annuities, as well as our reimbursement to our employees for expenditures that are actually incurred in the course of our employment. We talked about the concept of the independent contractor. These are specifically stated within our legislation that these amount are they are excluded. It's explained quite nicely within the fourth schedule as to which figures then are excluded when we are determining the remuneration. Now, some of the things that we may take into consideration when we are determining the remuneration is the concept of our reimbursable allowance in line with section 8 section 1 triple I. Now, what it does, what it states is that the reimbursable allowance, it must not exceed the rate per kilometer that is fixed by the minister. Okay, and also in terms of other travel allowances, it then bring in the concept of our 80% of the allowance that which is before the reduction of our business expenditure that have to be included within the remuneration definition. Okay, obviously we'll have to then take into consideration how much of those was expanded for business purposes or for carrying on the trade of an employer. Okay, now in terms of our right of use motor vehicle, which is a fringe benefit under paragraph 7 of the fourth schedule, what you then need to take into consideration is that the amount will be included in the remuneration of the remuneration definition, which is 80% of the taxable income before the seventh schedule, paragraph 7 and paragraph 7 subsection 7 and paragraph 7 subsection 8 adjustments. Okay, we will be looking at this very closely in line with the example that we will cover tomorrow in detail. Okay, so just watch out for the video that I will be uploading tomorrow. It will cover specifically these specific calculations. Okay, so I'm just making you know and alerting you as to some of the things that we will be covering from tomorrow onwards. Okay, now you have to understand that when we are determining the remuneration, there is some sort of an exception within the provisos of our definition. The exception is that in terms of the lump sum in respect of our accumulated leave pay, it's considered to be a payment for services that is rendered. Now SARS will guide for employers in respect of employees tax, will give some sort of a guidance as to how we deal with these figures. You will see that in terms of the lump sums, the severance benefit, the withdrawal benefit, when we are dealing with the provisional tax, this amount, they are excluded when we are actually determining the provisional tax. Okay, but I will be covering this in detail when I'm explaining provisional tax most specifically. Okay, now one one of the things that you need to understand, and appreciate is the concept also that we covered in first semester of our section 7 subsection 2 little b for our deemed income. Now with regard to the deemed income, we saw that first semester there could be a situation where the husband is a principal owner in the company or is holding an executive position, and then decide to try and shift the excessive income to his spouse, maybe who is working in the cleaning department. So under those consideration also, you know that in terms of the provision of section 7 subsection 2 little b, that income or that remuneration is deemed to accrue or to be paid to the spouse who is actually remunerating the wife. Okay, so it will be deemed to the husband in this instance if he's trying to shift the income to the wife. Okay, I want you then to remember that because it's very, very important. Okay, now for our annuities, okay, we know that paragraph little a of our gross income definition, it's talk about the annuities. So the annuities, they are included in the definition of our remuneration. Remember that the annuities, the payer of such an annuity, it will be an employer as defined within our legislation. Okay. Now, the employee's tax must therefore be deducted by the payer of an annuity, okay, except for annuities that are payable under the order of a divorce, because what we said is, in terms of the remuneration definition, those are not taken into consideration. Okay, we talked, the legislation, in fact, goes into an extent even in terms of explaining the concept or the situation of an independent contractor as to who an independent contractor is and who is not considered to be an independent contractor. Okay, now the question that you should be asking yourself right now is as to how then do we go about in terms of determining the employee's tax that will be withheld. Now this is outlined quite nicely within paragraph 2 subsection 4 of our fourth schedule. So the calculation, as I've said earlier, is based on the balance of remuneration that will be remaining after we've made this specific deduction. Now I want you to listen with 115%. Okay, attention. Okay, now these are the specific deductions that we make in line with paragraph 2 subsection 4 when we're determining the balance of remuneration. We make the deduction in respect of our pension or provident fund deductions. They are, however, limited to the section 11F deduction based on the remuneration. Now this is explained quite nicely in paragraph 2 subsection 4 little a. Now you'll see, I'll put the slide under the projector so that you can see what I'm talking about. Okay, I'll put the legislation under the projector so that you can see what I'm talking about. This is very, very important, by the way, the paragraph 2 subsection 4 of our fourth schedule. Maybe let me put the ledge under the projector so that you can actually see what I'm talking about. I have even highlighted what you need to be following in terms of our tax ledge. Okay, so when you look in terms of our legislation, it says that the amount that is required to be deducted or withheld from any remuneration under this schedule by the way of employees tax after deducting therefrom, and then they tell you the things that have to be taken into account. Any contribution by the employee concerned to any pension fund or provident fund which the employer is entitled or required to deduct from the remuneration, but limited to the deduction to which the employee is entitled under section 11F. Now that is very important. Now in terms of section 11F, you have to remember that the section 11F contribution, so after you determine your annual equivalent in terms of your layout or your calculation of employees tax, you have to take into consideration to then less the section 11F limited to the 350,000, and then you'll have to divide that figure by 12 because the first part of the calculation deal with monthly figures, okay, and then the second part we said that it deal with the annual payments. So you'll then take the 350 350,000 and divide it by 12, and then take the 27.5% of the remuneration that you have determined on a monthly basis. Okay, so this is very, very important, by the way, to take into account. Okay, so as I have explained, hope that you guys are following also in terms of our legislation, as I'm showing you here in the projector, in terms of what then do we deduct. Okay, I've explained quite nicely that it will be the deductions for our pension, our provident fund, which are limited to our section 11F deduction based on our remuneration. Okay, you can see it explained quite nicely here within our paragraph 2 subsection 4 little a. Okay, now also the other things that may be deducted, it's any retirement annuity fund contribution that is paid by the employer. It will also be limited to our section 11F deduction based on our remuneration. Now you will see that this is explained quite nicely in our little b cap a. So paragraph 2 subsection 4 little b cap a. Maybe let me see if I can enhance the viewing. We can see any contribution made or amount that is paid by the employer to any retirement annuity fund on behalf of or for the benefit of the employee, but limited to the deduction to which the employee is entitled under section 11F. Now that is very, very important, by the way, to put into consideration. I hope that you are following and you are not being left behind in terms of which are the items that we deduct in order to calculate our balance of remuneration. Because we said that the balance of remuneration, after you have obtained or after you've calculated the balance of remuneration, you then need to calculate your annual equivalent. Okay, now the other things that you may take into account that may be deducted are the qualifying donations. Now the qualifying donations are in line with section 18 cap a subsection 2 little a. Now, what it states is that these are made by the employer on behalf of the employee up to 5% of the remuneration after the above deduction, which are the deduction of our retirement annuity fund contribution, our deduction in terms of our pension, our provident fund deductions. Okay, this is actually explained quite nicely. If you look in terms of our paragraph 2 subsection 4 little f, it explains it quite nicely. Okay, even though I did not highlight it, but you can maybe use your highlighter and highlight it quite nicely. So you will notice that it says that it's so much of any donation that is made by the employer on behalf of an employee as does not exceed 5% of that remuneration after deducting therefrom the amount that are contemplated in a little b cap a. Okay, so and also if you continue reading in II, it says for which the employer will issue a receipt as contemplated in section 18 cap a. As you know, section 18 cap a, it deals with our donations. Okay, so I hope that you guys are with me in terms of this. Okay, now you will notice that when we are determining employees tax, after you have calculated your balance of remuneration, we then determine what is called an annual equivalent of the balance of remuneration, which have to be determined in order to determine the tax that is payable per our normal tax tables. Okay, so once you have then calculated the annual equivalent, you will use that annual equivalent to actually find out what is the tax as per our normal tax table. So you know then where we find our normal tax table. In terms of our legislation, this is our normal tax table. So there is our normal tax table, or our rate of our normal tax. Now, before I explain the rate of our normal tax, some of the things that I have to bring into account or into consideration is the fact that if you are using last year's tax legislation, you'll find that the primary rebate figure being the 14,000, it was 14,000 something, it have changed. The 2020 rate is different from last year's rate. So if you are using last year's legislation like myself, you'll find that it, in terms of the primary rebate or section 6 rebates and our secondary figures have changed. Okay, what I know is that the 2020 rates primary rebate, it's 14220, and also the secondary one, it have changed also. I will give you this rate closer to the end of this session if you are using last year's legislation, so that you are actually not lost and not using the incorrect tax figures in terms of our section 6. Okay, so what I'm saying is, in terms of the rate of our normal tax now, with that date, we will determine our annual equivalent of our balance of our remuneration, which we will use to determine the tax payable per the table. So you'll use the balance of remuneration to then determine the tax that will be payable as per the tables. Okay, so these are the tables that I'm talking about. Okay, so I hope that you guys are on the same page with me. Okay, now let me then continue in terms of the explanation, because I've already shown you which text tables I'm talking about, so that you are not using other things that I did not explain. Okay, so once you have determined the the tax that is payable per tables, you will then reduce the tax that will be payable per table using your section 6 subsection 2 rebates. Now your section 6 subsection 2 rebates, you have the primary rebate, you have a secondary rebate, we have our tertiary rebate, depending on an age of an individual. For what I know in terms of our section 6 subsection 2 is that the primary rebate figure is for people who are less than 65. So if you are 65 and above, then you will also qualify for a primary rebate, which means that you will take your tax that is payable, you will deduct, or you'll say less our section 6 subsection 2 primary rebate, you will less your section 6 subsection 2 secondary rebate as well if you are 65 and above. Okay, now what if you are 75 and above? That means that you also qualify for a tertiary rebate. Okay, so please make sure that you take this into consideration when we are determining employees' tax. Now, one of the things that I want to bring to your attention is the concept of our employees' tax in line with our Section 6A credits, as well as our Section 6 Cap B, subsection 3, little a okay, now these are the section B, the section 6, section 6 cap B, subsection 3, little AI, you will use it in conjunction with the fourth schedule, paragraph 9, subsection 6, as well as our section 6 cap A tax credits. Okay, we use it in conjunction with our fourth schedule when we are incorporating it to our employees tax determination or calculation. What it then states within our paragraph 9 subsection 6 is that we are given some sort of a guidance as to how then do we go about. So if you look in terms of our section 6 cap B subsection 3 little AI, it talks about these additional medical expenses or tax credit that apply to taxpayers that are actually 65 or older. And what it does, it gives them a 33.3% of the total contribution less our 3 times of our section 6 cap A medical credits. Now you'll see that I will be explaining this quite nicely along with an example. So make sure that you tune in to the next video, because I will be doing nice example or calculation using these formulas that I've been articulating, also in line with our section 6 rebates, in terms of as to how then do we go about computing. So we know that after we have less our primary rebate, we'll then less our section 6A tax credit, and then in terms of determining our section 6 cap B subsection 3 little AI, which is the additional medical expense tax credit, we will have to first consider as to whether the person is 65 years or older, and then what we will do is we will then have to use the formula, which is the 33.3% times, and then we open a nice square bracket sign, which is the total contribution less our 3 times of our section 6 cap A medical credits. Okay, now the reason why I'm repeating this It's because it's very, very important. Okay, now remember that I said that I did mention this, that there have to be some sort of proof that is provided by an employee to an employer to get this potential reduction. Okay, so you have to take that into consideration. Okay, so if the medical aid contribution are paid by the employee, now the reduction of that or the reduction of an employee of the employee's tax is at the option of an employer, which means that an employee must provide some sort of a proof of payment. It have to be vanished or furnished by an employee to that employer. Now, if the employer is the one who is making the contribution to our medical aid, you'll find that there is no need, okay, there's no need for proof. Okay, there's no need for proof. Okay, now this is very, very important. Okay, and also some of the things that I want you to remember is the fact that the employer will contribute to this medical aid, but the contribution that he is making is considered to be a fringe benefit. And a fringe benefit, as you know, as I've been explaining earlier, it's part of the definition of our remuneration. So this is something which is very, very, very important that you take into account. Okay, now one of the things that you should be then considering is that, okay, so Mtabisi have explained quite nicely up to the balance of remuneration. He also explained that when you're moving from balance of remuneration for our monthly figures, you then determine the annual equivalent, obviously by taking the balance of remuneration and timesing it by 12, and then after that you use that annual equivalent to the annual equivalent of our monthly balance of remuneration to determine the tax as per table. After you have calculated the tax as per table using our normal rate tables, you will then less our section 6 rebates, and then I even went further by explaining the concept of our lessing our section 6 cap A tax credits, as well as our section 6 cap B tax credits. Now the section 6 cap B subsection 3 little AI, I explained it quite nicely that